Hello traders, I hope you are all guys keeping well. This is Julio Pinero here. It's been a while. Um, I've got a few key elements here that I'm going to go through today. Um, Today's the 19th of March 2014. I've got three key points here that I'd like to go through with you guys. Um, Basically, the first one is how to plot levels or lines in the market. What I mean with levels, I mean support and resistance, which are they're all horizontal lines at the end of it. Also, how to plot trend lines. Okay, basically how to analyze the market. In other words, because before trading any strategy you're using, you have to understand the market. Once you understand the market, then you can look for potential trades by going through your checklist, see whether it's qualified or not. You look for quality over quantity, and then if it's good to go, then we take it. But before all that, we have to see how strong the trade is. Okay, what are the chances of having a winning trade on that trade? Because we're gonna put all the odds in your favor. Then, and the last point is spotting trades on daily charts once the lines are drawn. So once you analyze it, then how to spot um, those trades that meet your criteria. Okay, right. So let's get cracking. Let's come up from here. Bear with me for a sec. Oh, escape. Let's bring all this down. There we go. Right. Yeah, I'm gonna go into the just a daily chart. Okay, it's just a single daily chart um, with a 50 moving average and the 200 moving average and the RSI indicator at the bottom. For those of you who never heard about the RSI, um, don't worry about it. Um, it's better if you speak to your coach first and see if the strategy that you're using uh, can be used together with the RSI or the stochastics or the MACD or whatever it is. Okay. If not, if you're starting to trade, don't bother with the indicators at the bottom, so I'll ignore it completely. So don't look at that, and just look at the price action, which is the best indicator. What I mean with the price action, all these bars here going up and down, okay? Because on the daily chart, each bar will be 1 day, yeah, 24 hours, going up and down, up and down, up and down, and then you just have the 50 moving average and the 200 moving average, and that's it, nothing else, okay? Cool. So let's get started. Let's see what's happening here. For example, on the Euro Japanese yen, which I'm currently buying it. I'm just sitting on it and see if it's gonna make its mind up and kick off to the upside. We shall see. If you're looking to spend time analyzing it, what I suggest to do is to click on the square here. So you maximize the chart, so it's nice and big, and then you can spend time analyzing it and so on. Okay. Right. So let's have a look. So first of all, I'm looking for some trend lines. I normally use the one that says extended or the one next to it. Make sure you have number 2 there. So plot the line first. I'm gonna pick last swing lows down here, minimum 3 touches. There you go like that. So it'll be one touch there, one touch there, and one touch there. It'll be one touch per cycle. That doesn't mean that it's 1, 2, 3 draw line. You need one here, one there, and one there. So it's one per cycle. Then you can draw your lines. Okay. Now I'm gonna copy and paste it. I'm gonna put it somewhere up here. There we go. If it's going up, the line at the bottom is much more important. Okay. If it's going down, the line at the top is much more important. Right? Cool. Now, is the market giving high highs and high lows? Right. If you're gonna be confused with the high highs and high lows, first of all, don't look at the individual bars. Okay. Don't look at the individual bars. Look at the whole cycle. Look at just the bigger picture. So let's go into these lines here. There we go. So you can always change it. You have the bar charts, candlesticks, and the line chart as well. So just look at it like mountains. Okay, it's the bigger picture. There we go, and goes up and down, and so on, and so on, and so on. Yeah. So that's what we think is going to happen. Now we're speculating here. Yeah. So ignore this section here. Just look at the actual price what we have there in this moment in time. I'm gonna go back to the bar charts. So we have one cycle here, which is phase 1 and phase 2, and another cycle here, which is phase 1 and phase 2. Okay, now this swing high, this whole swing high, which can be 1 bar or 6 bars, it doesn't matter, the whole mountain, this whole mountain here is higher than the previous one. Okay, so it's higher highs, and here is higher lows. So this whole swing low, which happens to be 1, 2, 3, 4, 5 bars or whatever it is, this whole swing low, which can also be 1 bar, doesn't matter, is higher than that swing low. So this full swing low is higher than this swing low. So it's a higher low, and then here is a higher high. Cool. So we got higher highs and high lows. That's one of the most important points you have to go through every time. Is whether the market is going up or the market is going down. So it's giving higher highs and higher lows. Fine. Let's have a look in here and see what else we've got. Oh, there it is. That one. Now, is it giving RSI convergence? Yes, RSI convergence here. There we go. RSI convergence pushing up. And a few days ago gave a beautiful lotus bar, which is the, oh, excuse me. Let me just go forward quickly. Somewhere. Next cycle. There we go. I'm gonna make it bigger. There we go. So that bar there. Take your time and see if you recognize the last bar, the price action of the last bar. This one here. Yes, it's a lotus bar. For those of you who are looking at this bar here, it's actually a lotus bar. Okay. Why is a lotus bar? Because the tail is minimum half of it. So this tail down here is minimum. Just make it bigger. There we go. So this tail here is minimum half than the rest of the body. Okay. So that is a lotus bar. I'll place an entry just above the high of the bar, and the stop loss just below the low of the bar. Okay. Can be 1 pip, 5 pips, depends on your rules. Entry just above the high of the bar, and the stop loss just below the low of the bar. And this box here will tell you the open, high, low, and close of each of the bars. So what you have to do is to put the cursor on top of the bar. Well, not necessarily on top of the bar, on top of the bar. Sorry, it has to be on top of this date. So put the cursor on top of this date, and you look at that box there, and it will tell you the open, high, low, and close of that specific bar on that specific date. If you put the cursor on top of the previous bar, then that will tell you the open, high, low, and close of this bar here. Okay, be the open, high, low, and close. Okay, so you have to look at the last bar and look at the open, high, low, and close. So you get the high at 5 pips or 1 pips or whatever your rules are, and the stop loss, take out the 5 pips or 1 pips or 100 pips if you're looking in calculators. If you're looking in calculator, it'll be 100 pips below the low of the bar, so it'll be somewhere down there. So your stop loss will be down here. For an calculator, it'll be entry and stop. Okay, fine. So let's see, let's have a look. So we take it there, trigger in the market, and then on the next day gives a inside bar, and then on the next day, which is now, is giving a double inside bar. So I've been triggering. I'm currently sitting in negative, just about. Just giving a double inside bar. Entry has stop loss there, and you just need to sit and wait and just wait. Okay. So I'm expecting the market to put a new high again. And if you look at the horizontal lines, there's a nice horizontal line here. So that's the level of resistance, breaking through and becoming support down here at the bottom. Okay, so this level of resistance here, we're just testing it there, there, and there, is breaking through here, It is broken through, and then it becomes support there. This bar here. Okay, so it's testing. It hasn't closed below, so it's qualified. So the level of resistance, breakthrough becomes support, and it's also sitting on the 50 moving average, and it's above both moving averages as well. And that's it. That's good enough for me. So I'm just gonna sit on it, and just as it goes up, I'm just gonna manage it, and that's it. I'm trying to bring it up to somewhere here. And then if it puts a new high and it pulls back, I'll be looking to buy it again, and so on and so on. Okay, but we definitely need high highs and high lows, so the price has to go past that high nicely, and then pull back, and this low can never take this low out, and then off we go. Okay, that's fine. Cool. Well, that's what I've been looking at. It's actually running live now as we speak. Next one on the Aussie. Very similar pattern. Go to the, let's do an exercise. Go to the Aussie chart yourself and look at the bar on the 12th of March. Okay, which was a few days ago, last week. And now you have to analyze this chart. Okay, so put all the levels on. You can put the trend line, speculate what you think is going to happen, the phase 1 and phase 2, all that. So what you should do now is to pause it, pause the video, go to the Australian dollar versus US dollar, take how long you want to take, let's say 2 minutes, 5 minutes, 10 minutes, do the exercise, and then play it back again. Okay? Fine. So once you've finished off, you should have the lines like that. Copy and paste it, put one somewhere up here, because the line at the bottom is much more important, so the line at the top is not very relevant. Phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1, and so on. So it's a very, very similar pattern. Also, the market is giving the higher highs and the higher lows. So these are the last two swing highs and the last two swing lows. Yep, so the highs and the lows. He's currently sitting on the 50 moving average. Alright, so he's bouncing on the 50 moving average. It's not above both EMAs, but that's fine. It's giving a beautiful lotus bar here, sitting on the 50 moving average. And there's no horizontal neither. That's fine. So the other one had more points. Okay, the Euro Japanese yen had more points on the checklist when you go through them. But this one is quite a powerful setup as well, as it's giving high highs and high lows, sitting on the 50 moving average, lotus bar, and so on. Fine, cool. So we place that one. Put the cursor on top of the bar, get the high at 10 pips, or 5 pips or 1 pip. Stick to your trading plan, and then get the low. Put your stop loss down there. So in other words, it'd be stop loss somewhere up here, and the entry somewhere up here, and the stop loss somewhere down there. Okay, these are the numbers, roughly speaking. And then you just take it, and then let's see what happens next. Trigger in, low test inside bar, bullish continuation bar, and that's what we are now. So after the two continuation bars, I mean, just follow your rules to trade your stop loss. Can do it on a day-to-day basis, yeah. Or after two buy bars, or okay. You should have the stop loss management techniques. You should have them all on your trading plan. Okay. Speak to your coach if you're not too sure, and he can put a plan for you. Okay. Obviously, it'd be just for you. It'd be designed for you in terms of the your account size, in terms of the currencies you're going to be trading, the time you're going to be trading, how aggressive you are, how conservative you are. So he's just going to set up the whole thing for you, put a nice trading plan and a nice checklist that works exclusively for you. And once you have it all, then the hardest bit is to stick to it, is to stick to the trading plan and to stick to the checklist and to be disciplined and patient and all the rest of it. Yeah, that's probably the hardest bit, is to stick to your trading plan. you can easily deviate from your trading plan. All you have to do is just to stick to it, make it rock solid, and just do the same thing over and over and over again. Um, right, so once we take it, we just trade the stop loss, trade it. We'll retain the money, so it's all good, all great. Just trail it. I can take it up to here, and if it puts a new high, you can take it again. Or if not, you can hold the cycle and trade the cycles as well. That's up to you how you wanna manage it. But it's looking very bullish, and it's not making new highs just yet. But all you can do is to trade the stop loss anyways. Okay, and that's it. So that's a beautiful trade there as well. It's performing very well, and yeah, I'm winning the money already, so it's good. Great. So I hope you understood how to analyze the charts, how to put the lines on. The horizontal lines are here. Okay. If you don't have the price, what you have to do is to you do right click on it. You do right click on it. Take this box, put it on the right hand side. For example, number 2, change the color, and then do defaults. Save current setting as default. Click OK. Done. And then here you have just the line. All you have to do is to put number 2 there, so you make the line a bit wider so we can see it clearly. And that's it. This one is to draw the arrows, and that's to measure the pips, and that's it. That's enough. Fine. So let's move on. Let's see what else we got. I'm still buying gold, regardless. Um, I'm still sitting on it. I got in down here at the bottom. I'm sure most of you knows that. I got in at 12.14, I think it was 12.12, 12.14, somewhere right at the bottom. And it's just printing money now. There's no reason to pull out at all. It shot up to the well, actually smashed through the 1350s, which is awesome. So it smashed through this big level there, which was a pretty key level, as you can see there. I'm looking at the cycles. The whole cycle has to touch and reverse. So don't look at the individual bars, look at the whole cycle as to touch and reverse. So that's one bounce there. There's nothing here, this is too tight, not very powerful here, nothing there, nothing there, nothing there, one there, because the full length of the cycle or the mountain touched and reversed. Here it tested it, and then it broke through, and that's where we are now. So it's having a massive sell-off today, and yesterday, and the day before. But it's been going up for months. It's been going up for like 3 months or so, so it's pretty expected really, gonna go up on a straight line, gonna, so we'll have to kind of breathe in and out and give cycles. So, and it was giving a massive divergence there as well. So obviously it was massively overbought, so then we need some sellers in the market. Sellers are coming in, and it's currently sitting just beneath the 1350s there. But it's all good. It's all fine. If this bar gives a lotus bar, it could potentially kick off again to the upside and take off up to somewhere here. And the next traffic light, or the next level, is 1420s. That's the one I'm keeping an eye on. Make it a bit smaller, like that. So let's have a look. So the full length of the cycle again touches and reverses, so that's definitely one touch. Here as well, touches and reverses, another touch. Here is broken, so it's nothing here is qualified. Now we go back a bit further, and there we go. Full length of the cycle touches and reverses, and again, so we have 1, 2, and 3. And here is nothing there, very messy, just breakthrough, it's all over the place. You have to touch, reverse, touch, reverse, it has to be clean, very clean. So now that's where we are now, so that's why it's a level there, 1420s. The next level will be at 1550s, that's the next level, and the next one is up here at just beneath the 1800, yeah, just beneath 1800, just beneath that. I think it's like 1785, something like that, this area here. Cool, so that's where we are now. So we shall see what's going to happen. Okay, it's looking bullish. Broke to the 1350s. Next level is there, and then we just want to track it. Okay, right. So that was gold. Let's see what else we've got. It's intelligence. What it's doing. It's taking off again. Fine. Dow Jones is closed at the moment, so you're gonna open at 2:30, from 2:30 to 9 p.m. And so on with the S&P, the Nasdaq, Russell, okay, all the US indices, and therefore the US stocks as well, which are trading within those indices, and obviously the sectors that belongs to as well. Right, let's go into the power play. Let's move on to stocks. In Ocado, and in never got triggered. Very unclear move here. So it could have potentially bounced here. That could have been a good trade. So this one here, the low test. Takes off, you try your stop, and then you get stopped out and make some small profit there. And then besides that, there is no price action. The only one was the bullish continuation bar. So you can put an entry above the bullish continuation bar. Never got triggered, so you cancel the order, and that's it. And nothing else there. Just a bearish bar there, so it's very bearish. So it's nothing there. So there was one winning trade there, and another trade that didn't get triggered, so you just cancel it. Cool, let's just have a look at another one. BDEV, I think it was, dash LON. Let's have a look, yeah, that's the one. I'm buying this boy down here. Okay. So make sure you always analyze it, put the lines on it. Put a line here like that. Copy and paste it, put it up here somewhere. That'll do. And then you have to put your levels on. So this is what you have to do. That's the level of resistance becoming support. Sorry. Level of resistance becoming support. There. Level of resistance breaking through becoming support. Bouncing on the 50 moving average. That is not a low test bar, but it's a bullish continuation bar, so you can put an entry here, stop us there, and then off you go to the upside. And just follow your rules after that. Oh, sorry. Let me just change the color. There we go, that's better. So there we go. That's the Barrett Developments, which had a big crash in 2007 during the recession, went down to pretty much zero, and then they've been recovering ever since. Okay, so this is the monthly chart, the bigger picture, the monthly chart, and then if you go comma, W, enter, weekly chart, and comma, D, enter, back to the daily chart. Great. Cool. Bear with me for a sec, let me just put this down. Just gonna log in here. Right, let's just go through these few trades that we have. So look. Let's see. TPK-11. This one never got triggered. This beautiful lotus bar, inside lotus bar, never got triggered. You just cancel it on the next day. Done. So there's nothing there. Next one. Tube dash 11. There we go. This is kicking off nicely. There we go. So, phase 1, phase 2, phase 1 to the upside again. That is a high bar. So high bar is an indication that the market is going to go down. But if it fails and it breaks to the upside, it's going to carry on going. Well, it's on a 10 and it's going to carry on going up. And that could have been an entry here, stop loss there, and then to the upside. None of those got triggered. So this low test bar didn't get triggered. Cancel it. Then you get a high test bar, bounce to the 50. You can put a entry as stop loss there, and then now we're on it, and you just follow your rules. And what else we've got? Yep, that's the other one. Yep, that's fine. Right, let's see what's happening here now. Considering is right, we've got these two today. So you go power play long possible, all 4350, minimum price 1, not 100. So then you get Lloyds and the other ones. Maximum price 50,000, that's fine. And the minimum volume you have 500. I put 380,000. So I'll have more. It's gonna give me more options. If you put 380, 380 is fine. It's enough volume. And then make sure you tick this box, and then click on go. And once you have all the settings there, I suggest if you save it, so you go page save page, so you have all your settings saved. And this is the first one. This is messy and choppy. Leave it alone. Next one. Big right. Okay. So what's happening here? Okay. Let's do an exercise on this. The code is CSR-LON. So just select, do left click anywhere on the chart, left click, and then do CSR, and then dash LON. Even if you're not trading stocks, or even if you don't have the stocks subscription, you can still go onto them just by typing the code, and it's gonna kick off automatically. Click on enter, and there we go. And you get the stock itself, and then you can spend some time analyzing it. So let's give it again 5 minutes. You know what to do. Analyze it, put your lines on it, support, resistance, speculate a little bit, see what things gonna happen. Phase 1, phase 2, and then play it back again, and then see if it matches up with my one. Okay. Right. So I hope you've finished off already by now. I'm gonna analyze it myself, and then just compare to your one, and see how accurate it is. So the way I see it is like that. Pretty straightforward. One touch there, one there, and one there. Oopsie. There. So 1, 2, and 3. That's good enough. And then you just copy and paste it. Right click copy, and you put it up there somewhere. Okay. So it matches up nicely with those highs there as well. Right. How about the cycles? Have you done the cycles as well? If not, go on the pencil. There it is, pencil up here, and then just do the phase 1 and phase 2. Yeah, the usual cycles that we usually do. Yeah. So it'd be phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1, phase 2. Okay, and off it goes to the upside. So these are the cycles. This is one cycle, another cycle, and another one, and another one, and so on and so on. That's fine. That's fine. Let's make it bigger here quickly. Right, there was a rejection zone. Hope you have your horizontal lines in place as well. That is level of resistance becoming support. So level of resistance becoming support. And let me just delete all these lines here, it's getting a bit messy. Right click, remove, right click, remove, right click, remove. There we go, that's better. So now, as we speak, the market is giving a bullish continuation bar. So that could be a nice trade for tonight. So all you have to do is to put an entry just up there, stop loss down there, and off we go. Entry just above the high of the bar, stop loss just below the low of the bar. So this will be the full risk on your trade. This is the tool to measure the pips. Make sure you tick this box. And then default, save, okay. It's that one there. You can measure the pips from anywhere to anywhere. Even if you do it like that, it's still going to be 20 pips, 29 pips, sorry. You can do it straight, or you can do it like that, it's still gonna be 29 pips because it's measured vertical wise. Okay, it's using this axis to measure the pips from A to B. So for example, this full phase 1 is 142 pips, this phase 2 is 106, because the phase 2 is always smaller than the phase 1, and again 140 something, 100 pips to go down, and so on and so on. So we can take it here, and you can go for a, let's have a look, there'll be a 1 to 1 reward risk ratio, 2 to 1 reward risk, 3 to 1 reward risk, 4 to 1 reward risk, let's have a look, and a 5 to 1. So this will be your potential reward, 150 pips against the 30 pips stop loss that you're going to have. So that'll be your entry, your stop loss. So if you put a pound a point, you'll be risking £29. So let's call it £30. So you need minimum £3,000 in the account, because £30 is 1% of 3,000. So that'll be your 1%. Okay. If you have £2,000 in the account, you cannot place it because you'll be overexposed in the market. And then the reward will be a 5 to 1 reward risk. Let's say 1, 2, 3, 4, 5. So worst case scenario, you lose 1%, which is £30. Best case scenario, you make 5%. So it'll be, and each percent will be £30. Yeah. So it'll be that. So it'll be 30, 60, 90, 120, and 150. Yeah. Against the 30. Okay. We don't normally talk about money, because we only talk about percentages, but it's just for you to have an idea of it. So you'll be risking £30 to make 150. So that will do. Okay, worst case scenario, you give 1% back, which is 1%. If you get it right, happy days. We're looking to get minimum 3 to 1, 4, 5 to 1. Okay, and these are the patterns you have to look for every time. But obviously, you need to understand the market. You need to understand the behavior of the market first. Put up the lines on it, and then it's good. Then we can go for it. Okay. Um, the only problem is that the volume is quite low. The volume just there was 1.4 mil, not bad. Day before was 700. Okay, just over 700k, and then 360, 330, around the 400 mark normally. Besides the big spikes. The last bar is irrelevant because the bar hasn't closed. It's gonna close at 4:30. So this little bar, which is indicating that there is a volume of 106,000, I think it is, yeah, 100, just over 100k, is irrelevant because the bar hasn't closed. So, and the bar is gonna close at the bar is gonna be from 8 to 4:30. So at 4:30, once the market is closed, which is when you place your orders in the market, then the volume is fixed. It'll be that volume for that day, and it'll be done. Okay, then it's relevant. Okay, so ignore the last bar, but yeah, it looks brilliant. It's like a very good trade to go on for stocks. Okay, right. So I'm gonna leave it there. I hope you guys maximize this quick session or video, and I hope it's clear enough how to analyze the market and how to plot the lines and how to spot good trades in the market. Okay, so right, I'm gonna leave it here for now. All the best, happy trading, and I'll speak to you all soon. Cheers there, and take care.